Okay, hi there, guys. Dav, how are you, mate? All right, just let me know if you can hear me loud and clear. Looks like I'm writing to myself in the chat. Have a conversation with myself today, it looks like. All right, just let me know if you can hear me, and I'll rip into it. G'day, John. How are you, mate? I'm hoping my. Let me just get rid of everything. All right. All right, looks like we're right to go. All right, thanks for joining me, guys. Welcome to Trade Setup in the live stream. What do we got? The 7th of May. So kicking along nicely in the month. Big night on Friday night in the US. We'll go over that in a minute. For anyone that's new or anyone that listens to the stream later on, welcome. And just remember, what you see on the screen here, you can join us on Twitter. The top left-hand corner, there's a few things we post here and there, stuff that takes our fancy, stuff that we think is interesting or could be worthwhile to keep an eye on. We'll post it on Twitter. Facebook, look, it's probably just the same thing as Twitter, to be honest. We don't post as much on there. But on YouTube, the bottom right-hand corner, you'll see subscribe to us at YouTube if you're new. So anytime we do go live, it'll pop up with a notification that we have gone live. And if you're not on the TradeSetup app, you're getting notifications through there, then you'll get it through YouTube. All right, and just a last but not least, it's a general advice warning. You can see on the screen there, we don't give personal advice, just general advice. So whatever we talk about, whatever I blab on about, is just my own opinion, or it could be Dav's, which there I'd be careful. All right, let's get into it. I'll drop that down. Let me just, I'm just going to change the screen. There we go. You should see the whole thing now. All right, hope you had a good weekend, guys. Anyone get up to any mischief, or everyone had a good relaxing weekend? I know I did. Mine was quite good. I don't know, I can't remember what we did actually. Saturday was a big clean-up day. The kids are a bit of a menace sometimes, and they make a hell of a lot of mess. So you're constantly cleaning up. Big clean and polish on Saturday, relax Saturday night, and then a bit of a day out with the kids on Sunday, the family day. So that was good. Good to relax. I think it's important. Um, all right, Friday night in the US. We'll dive straight into the markets. They had payrolls out, so that was sort of the big number that was out at 10:30, about an hour before the stock markets in the US opened. So we've got Europe. They did pretty well. They were hanging in there okay. Most of the markets, when you come into the payroll, which is the first Friday of each month, that's the biggest number in the US, especially with regards to interest rates. There's a lot of focus now on not just interest rates. What are we saying? Payrolls, not employment numbers, but also uh, what do you call it? Pay. I forget the word now. I always forget the word. Income, a personal income, whether it's increasing or jobs income, whatever the name is there. But that wasn't too bad. That was a bit less than expected. I think payrolls themselves come out a little bit less than expected, but just be wary because if you go back on the data, I think every month that comes out, it's been changed. So the previous month will get reassessed, and they've bumped them up. So if you look at last few months at least, the numbers that have come out have been bumped up the following month. So it might be down, say, expecting 160, it was down 140, say. Next month, that number could be bumped up to 150 to 160 anyway. So it's still, they're still chugging along quite nicely, though. I think their unemployment rate dropped from 4 to 3.9%, which is another good thing, but it's more the wage pressure that dropped. Or, well, it didn't really drop. It was less than expected. I think the number was coming just a point less than expected. So that's obviously easing pressure off interest rate rises. So that's an important thing. And it's more the pace of interest rate rises. It's not so much they're not going to do a couple of rate rises. They're pretty much booked in. Maybe what do we had another two this year? I think we've had one this year. If so, if we've had two, then it's one. So there's really going to look at three for this year. They were looking at four if inflation was getting out of hand, but they can see that inflation's well contained. The Fed didn't raise rates last week, and they were saying that they were pretty happy with their rates around the 2% mark. Um, Let me just check. Sorry, I just noticed there's one thing. If you're getting off YouTube, if you're seeing a fuzzier sort of a screen, go down to the right hand, drop it down to the top bottom right corner, the little spinning wheel, hit settings, hit quality, and just drop it up to 720p, and that should fix the problem. So yeah, they're looking at, we're saying the rate of interest rate rises have been contained, and I think the Fed was happy with their inflation. They're normally looking around 2 to 3% on your CPI numbers, which they're happy if it sticks around there. It means they don't really have to raise rates. But when you get inflation getting out of hand to the top end of say 2.5 to 3%, above 3, they'll be raising rates, or they're looking to be raising rates. But as long as those numbers are not as inflationary as what they're expecting, then that's well contained. Then they won't have to raise rates at a faster pace. And you can see that the bonds backed off a bit. The yields on the bonds have backed off on Friday as well, which is good. So that takes the pressure off. That when bond yields were heading higher, we were talking about above 3%. That was putting pressure on your equity markets. They were getting a bit nervous, along with everything else, because then down the track you're going to look at companies the cost of debt is going to go higher, is going to be higher. So if that's the case, then that's going to crimp their earnings potential and so on. And people are just trying to factor that in. But if the rate rise is not at a fast enough pace, then everything's going to chug along. You'd think it'd just chug along like it is. But still, the US is still a bit that, it's a bit choppy. It had a big rally. They've had a bit of a drop off early in the week. So from week to week, it's probably just grinding up one week, down the next week. A bit of a grind more than anything else. So we'll have to see how that continues to play out. I'm still looking for, say, obviously in the US, for company earnings to be peaking more than anything else, and that's thanks to the little uh, tax cuts they got flow on through the companies. So that may have peaked. I think a lot of people in the US will be looking at that as peaking. But as long as bond yields not going up either, um, then it's sort of, we've talked about this in the past. You get major funds will be starting to flow money out of equities potentially if they're not going to see the growth that they're not seeing the growth in the future is what what they'd like to see, or they may see things peaking. They may start to get out of stocks and put it across to bonds. But if bond yields not going up either, they're sort of stuck. Everyone's sort of stuck in a bit of a holding pattern at the moment. And of course, slowing it down to our market, we did expect the market to open up about 40 to 45 points today, which it did. I think, I don't know exactly where it opened up, but it was up 45 when I was looking at it just about quarter past 10. Let me just see. We're going to have to figure it out. Hope my maths on par today. Open 60.63. Where did it close the day before? No, that's not true. I got the wrong date. Anyway, it was up about 45 points after the open at quarter past, 12 past 10. So yeah, doing quite well. It has backed off a bit, and it did we're up 34 at the moment. We're down around 29, 28 just before, and just had a little pop. So I think we're going to hold these highs. We spoke about this the other day. You can see how the market towards the end of last month, the start of this month, has just popped. It's really gone vertical, and I think it's caught a lot of people by surprise. It may be expecting a bit of a pullback, and like I was saying, we're getting stretched up here, but it doesn't mean you can't just keep going. I mean, the market stochastics can stay stretched for the next month. So a bit like this through October to start of November, stay stretched and keep grinding higher. So just be wary that you're not waiting for this pullback and then it just doesn't come and you're giving up some good setups in the markets anyway. All right, what else we're talking about? Not so much. We've finished with the US. Let's just see where. I guess we don't really need to go over the charts. I wouldn't say they've changed that much. Let's have a quick look at what the Dow's doing. It's mainly the Dow and the S&P. What's that? That's the S&P. That's the daily. You can see it's still holding lower highs, which is somewhat of a concern. But I'm seeing this as more of a little base that's built. I mean, this lower high can still pressure, and we could blow out these lows at 25.50, say, and head lower. We've had that big sort of shock lower. We've retraced quite a bit. We built the lower high around 28, pushed back down to retest that zone, fell up short, fell short a little bit, pulled up short. That's what I was trying to say. Pulled up short a little bit, only a few points. What do we get? A low of 25.32, low of 53. So it is probably about 20 points, which is quite decent. Pulled up short there, then bounced and made a lower high again, just above 27, and we started grinding high. But you can see this action of, I'll make that a bit bigger. I don't need to draw it. You can see the difference between the action like that was just bang, complete capitulation, sell off, volatility spiked, and then volatility was still high, good bounce. And these 3 days, bang, straight down again, so that it really gave up a lot when it headed south. See the difference here. You can see that it took quite a few days. There's 1, 2, 3, 4, 5 days, 5 red candles before we found a bit of a base. Wasn't capitulation at all. It was, starting to see. I mean, when you're getting volatility really coming out of the market, it's showing signs that buyers are starting to even out between buyers and sellers. The buyers are even out the sellers, and then you get a bit of a bounce here, another little minor lower high, inside lower high, and then a red candle followed by a green day, then a red day, then a green day, or a big rejection candle of 26. So that's more of that. What I always like to see if you've got it in a pullback. Oh, so I just want to make that a bit smaller. There you go. So rather than seeing big sell-offs like that, I'd rather see this type of move. And we've got that 2 moves you can see just here, 1, 2. And then you start to see if we can get some buyers starting to step in and build those higher lows, and you get that compression in price. Then you might see it starts to bounce and kick up on the S&P anyway. And then we start from there. If we can hold up through here, so you've essentially got your double bottom, potentially a double bottom with a washout. You can see just that rejection of, that was Thursday, that big rejection candle there. I'll draw that up. I want to draw that in a proper, I just want to know where I'm going to go. Here we go, let's just go here. I think it's really all eyes, really. I know we talk about the US a lot, but it is pretty much all eyes in the US, isn't it? So you got that, the market's just heading south, sort of grinding up lower. But then what you've got is buyers stepped in here, and then buyers essentially stepped in at slightly higher prices. You can see that. I classify that more as a washout, and I don't mind that kind of move as opposed to this move, and even that move, and especially that move. The way it was acting before, it looks like the selling is trying to come in, but it's getting held up. The sellers are really getting held up, and buyers are starting to step in. That's good when you get that. So really, the first port of call would be taking out that little high. I think it's around 26.75, and then of course up towards that. What's that? That's about 27.15 to 20. The previous highs up here, and if we can pop up through there and then break out of this contraction, then you might start to see either one, it just goes sideways and takes a lot of heat out of the market just by range trading for a while, or building again. I think it's a tough call, in my opinion, to see it build again and start, trending up to the high, making new highs and everything, because it comes down to company earnings, and I'll probably just dropped out. I'm feeling, don't know why. There we go, back on. Never mind. It comes down to what are people going to factor in for company earnings over there. Still chugging along. Might be happy to hold. You never know. It could just keep grinding higher, which is fine with me. So back to the ASX. Let's just go back over here. That's your Dow, S&P, sorry, Dow, very much the same. FTSE, you can see that's just sort of turned on a dime, boom, straight back up again. Let's look at the weekly. That's, not much to say on that one. It's getting up towards the highs, but it's getting overcooked up there, but it could easily just go bang up straight through those highs. We have to see that was a big flush out of, and it's mainly, you can see this action here. It was essentially sideways, it was grinding, really grinding for the best part of 2007. Well, 2017 up towards the end of 2017 where we had that little spike, and then boom, straight down. So it's just cleaned out all this sort of work that's been done through here. And then the DAX, a bit of the same. 2017, it's still sort of spiked up, had a bit of a pullback, spiked up to new highs, struggled to clean out those highs there, and then we got that big sell-off. But it was holding up through that 12,000 mark, which it has. It just got through 12,000, but that's not convincing. Then you got sort of rejection in here, around this area, rejection of through 12,000 and bounce. So that's looking positive. I'm expecting more of a bit of a pullback, building a higher low, and then starting to, but taking a longer time to build, find that support, and then go on from there. All right. Now, what was I going to say? The XJO. The XJO, we've spoken about that. like I said, just be tentative. I mean, when I say market stretched, I like to think the probability of it going higher is getting lower. That makes sense. It doesn't mean that, I mean, we're talking about the overall market. Now, the overall market's made up of ASX 200 stocks. You can't go and look at it, worry about all 200 of them, but you just know that, you know, if you're going to buy the banks potentially, there might be some downside, and if the market topples over in your bigger stocks, but there's still going to be some prime setups that are going to come into. Let's just look at one. This is Jarvis, for instance. That's contracted while the ASX is kicked off. That's done bugger all. Now it's looking like it's finding some support. You've had that one leg down, little pop, another leg down, and then it's just starting to pop the last few days. It is getting overcooked up here on the daily chart, but the weekly's quite good. The weekly's in the opposite spot. It's oversold with this move off the highs from 70 down to say 40. So you really got to be looking for prime setups rather than just chuck anything in the portfolio and hope for the best. There's times when you can do that when the market's very strong and very bullish. You can pretty much buy most things as long as it's trending high. You don't have to worry too much about your entries and your risk because you know that the market's bullish and it'll probably turn on you, may put you under a bit of pressure and then turn around and head back up. But times like now, where we're seeing the US getting maybe, we don't know whether it's going to turn around and go up or head lower or what's going to happen from here. But I don't think this market, any of the market, like our markets, the US or Europe, is conducive of a bull market at all. Not at all. It's pulled back from the highs. It's getting a bit choppy. There might be a lot of sideways action over the rest of the year. We may head south a bit more. You don't know what's going to happen. So just diving into anything left, right, and center is probably not the right thing to do. It's all about quality setups right now and risk. Know exactly where you're going to put your risk on any trade. I saw just recently someone put up a trade. Um, Although it worked out, I pretty much disagree with the entry because that's not the way I enter, and it's what I say a lot. Um, I'll just talk about it. Actually, I'll talk about. Let me just get rid of this. I'll get rid of that. I just want to talk about entries just for one point because I think your entries in times like now. I mean, you can always disagree with me. I won't listen to you if you do, but yeah, you can disagree. I think entries are a very important thing. Um, Purely because it keeps you out of a lot of trouble. I mean, there's going to be times when it doesn't really matter. There's times when you're going to be right, you're going to be wrong on entering, but I think what it was, the market was heading south, for instance. Um, we're looking for, what I'm always looking for is that, a good retracement, and I want to see some sort of action where the market is starting to hold some high lows. Right, so that's my style of trading, and then I'm looking for the price to break out, and off we go. What I would, and then I'm working. This for me would be probably not this exact example, but say it pulled back. Let's just do a different color. So the market now pulled back. We're starting to come out of this contraction lower, and don't forget this might have been a weekly trend. A big strong weekly trend up, a weekly contraction, and I'm looking to go into the next weekly leg up, and I'm trying to get in early as possible, take as little risk as possible before the market starts heading back up again. And I want to buy it on the rise. I want to buy it when it's going up, not when it's pulling back into a support level. So for me, prime entry, buy your risk, and then hopefully you're right. It goes up, attacks those highs. That's your first sort of analysis. What's going to happen when it gets up there? Maybe take a partial if you got some good gains on the board, and then seeing if you can get it to drive through the highs, and then okay, just follow it up. And then from there, it's just all about how stretched the leg is, where it's going to, how much more probability you can assess to that leg up. What's your longer term view, and all that sorts of things. When you're in profit, then it becomes just a risk play. You just knowing where you put your risk by leaving the trade still open to continue. But I guess I've just got away from the point. My point really is more about entries. That for me is an entry when the market's rising. I know exactly where my risk is going to be. Say, for instance, there's a major support zone and the market's sort of trending down to that support. I would never just buy on that support. There's times when it's going to work, and you just sit on, what we say is just sit on the bid. So I put in a bid price as the market, say the market's here, it's just starting to come down. I wouldn't just sit in here and go, okay, I'm going to buy, put in my bid around that zone there, and if it comes down, I buy it, and I'm going to put my risk just below, because you never know what's going to happen when it's going to drive in, and you go, okay, yeah, it's just popped off, and then boom, straight down, stop you out, wash out this major support zone, and then starting to back up again, and then rallying. All right. So I'm not a firm believer in that at all. So I thought I'd just mention that there's going to be times when that's going to work. If you've got your risk in the right spot, potentially you've got your risk down here. Okay, it's washed it out, didn't touch your risk level or your stop level, and it turns around and retraces. You're profitable. That's great. But I think, again, it's a bit of a toss of the coin when you trade like that, because there's no confirmation that buyers are stepping in at that zone. You're more just guessing on a pullback. You're sort of guessing that entry. You're not getting confirmation that you're in the right zone. I think where the markets are at the moment, and the way the markets are moving right now, and really picking your prime entries and your prime stocks, your prime setups, it's a lot of it comes down to your entries and how you work your entries. Okay, for risk management. I mean, there's times when there's a bunch of stocks that we've been watching that have just taken off because I've been waiting for my entry, it just never played out. Which, okay, it leaves you with maybe not a big portfolio, but at the same token, there has been some that's, for lack of a better word, especially for me, crap themselves. And if you were sitting on the bid, especially if you don't use risk levels, then you're sitting on the bid. You got bought. Of course, you're going to buy it when it goes through your level. But if it keeps going down, what are you going to do from there? Okay, so that's why I'm always looking for that risk level. I mean, I'm always looking so I know exactly, say with this setup, I know when it continues higher, I'm on the right side of the market because I've done my analysis. Weekly trend up, weekly contraction. We're in that zone. We're starting to come out of weekly contraction. I'm looking at my daily charts for my entry. I'm buying it on the rise. I know exactly what should happen if I'm right. If I trigger my entry, my risk is here. If I get done on my risk, something's wrong, so on and so forth. But I'm not just buying off the bid where I'm just hoping that it's going to turn around and go up. I'm hoping I'm buying in the right direction, because I think for the amount of times you're right, you're probably going to be wrong just as much. Or you have to have really wide stop, and the amount of times you get clipped on wide stops, um, it's all going to work out. Maybe it's going to be 50-50 longer term, but I think there's a lot better ways to improve your trading, and that's just by one little point of entries. But hey, sometimes it keeps you out. It keeps you out of good ones, but also keeps you out of trouble. And I think you do enough work, you're always going to find some good setups. Right, any questions? Just what I was banging on there about, guys. Agree, disagree? Um, um, put in some charts. If there's anything you want to take a quick look at, whack it in the chat and we'll get onto it. I just want to see, let's just take a look at some of the currencies. I'm getting into the currencies at the moment. Probably not anything on the go. This was the latest one we had. It was a short on the Aussie yen, which yeah, would have taken a partial, but we got stopped out. I'm just going to show you. That's a 4-hourly chart. Probably, well, the reason why I reckon we got out of this one was more just over analysis, probably being a bit stupid. So the trade was essentially off the 4-hourly, and if you're off the 4-hourly, the reason why we sold it, just trying to find out where we sold. I think it was here. All right, so we entered short here. The risk was up here initially off the 4-hourly chart. I'll just move that. That was my risk essentially. The market's head down, push back up, push down, and this is all part of one leg down. Right, so really I should have, once we got through here, we got at this point again, I should have moved my risk down to here, which I did. And I think when it's pushed down, it got a bit around here. And I think after I saw it pop up from here, I'm looking at this longer term, I think it was more a daily move higher. No, sorry, daily support, that rising support there. I'm looking at that, and I'm looking at contraction. I think it was this move that sort of, what do you say? It squeezed me out. And I'm looking at that. Sorry, not that move there, but I'm looking here. I thought, okay, well, let's just tighten the risk up. But this, when you're looking at the 4-hourly, this is all part of one move down. So my risk should have really stayed up here. And in hindsight, this little move back up would have put us back under pressure, because the entry would have just been back above the entry. But in hindsight, it's turned out quite nicely. We would have taken a partial, probably had the risk back down to here somewhere, 82.50, just above, give or take a few pips from the entry. We've locked in some gains and just hopefully watching it head south. But it is getting choppy now. But really, that's probably a good example of not stuffing around with your risk levels too much and tightening it up too much, and what could happen when you play around it. I mean, it locked in a small gain, but At the moment, we would have taken a partial, which would have been a lot better, and we probably would have been, well, would be better off now at 82.16 than where we got out about 82.35. So yeah, I thought I'd pop that one. That's been, look, it's turned out okay now that we've got the beauty of hindsight playing out, but not when we traded. The other one was the euro. The euro was a short. I can't remember where. I think our final, we were shorting it somewhere in here, right up here. Look how much, I mean, it kills you when you see how much you're giving up left back on the table. Let me just see where we were. So the entry was just off this lower high. You can see the market's pushed up. You've got a reaction level up here, 25.34, push back down, and you started building this bid level. Problem is we didn't get much higher. We built another lower high. And when you see these washouts, for me, a washout of a previous high, especially below a key level, is really going to lead to a move lower, which it did. It didn't get all the way back down to support, but then you've had another go. The bulls have started to try to work in. And this at this stage, we could have really had another um, washout here, and that could have led to a move up. But instead, we've popped up 1, 2, 3, and you see at this stage we've got a major resistance, another lower high, another lower high. So the pressure's just coming in and starting to smack those bids, or the buyers on the euro. And it was about this stage when we took a short, just thinking, well, if we go back down and test this level, we're going to be a winner. If we go further and test down to here, we're going to be a winner, even bigger winner. I think we took some at, I never remember, 122. Oh, I think it was around 122. It was a good 120 pips all in all, but we've given up probably another 200 pips. So yeah, that was a massive sell-off in the euro. The US dollar rallied a bit, so that looks like it's still sort of continuing. So we'll keep an eye on this one. We just got to really, it's just trying to pick a level where it may be pulling up short, but we'll see how that goes. So yeah, we'll be keeping an eye on anyone that's into currencies. Feel free to put a put a pair up there if you want to take a look at it. Otherwise, we'll just keep plugging away at the stocks. All right, Sharon, what do we got there? Protect Capital, CSR. All right. Yeah, look, I think there's times when you got a bull market. Yeah, I still would trade the same, but I think it's a lot easier. Things get a lot easier, and you've got more opportunities because everything's setting up, everything's going up, blah blah. And it's just a bit easier. But when you've got times like we are at the moment, it's preservation of capital is key. You don't just stay out of the market, of course. You've got to take the chance because the last thing you want to do is just expect, okay, when the market pulls back, I'll be a buyer, I'll load up, and away we go. I'm going to do really well. But what happens if it just keeps going up and you're sitting there watching it, waiting for this pullback, and eventually you get your pullback, but it could still be 200, 300 points higher than when you initially made that decision. Does that make sense? So it could go up 600 points, pull back 300 points, and you're still 300 points out of pocket, if that makes sense. So it is, the markets, if you're seeing a good stock with a good setup, you have to be really risk adverse, but there's no reason why you can't get on the right side. Look at BPT was one that we're loving at the moment. Bought it through 130 or so. That was nice little setup. We figure, okay, we're going to push down here, pop back up. We've got some contraction in the market, a lower high and a higher low. But when you get this double tap on 120, say, and it started to lift, then I was happy to be a buyer. And look, it hasn't stopped yet. It's just grinding higher day by day. So still looking around that 170 to 80 mark. It might run out of steam, but hey, we don't know where it's going to go to. So, and look at this. This is a good example of being overbought. It was overbought when it was about 140, coming into these previous highs. These previous highs around here, we got out of a partial into overbought territory. It stayed overbought and kept grinding higher. So that's a good example of not to second guess anything. I like to go purely by price action, and if it's still going higher, I'm just raising my stop. There's times when you're obviously going to tighten up your risk because you do not want to, if the market's heading south and start to get really shaky, I'm happy to tighten my risk up because I think there's a lot of stocks people will always start to sell if the overall market's heading south, even if there's technically or fundamentally no reason to sell a stock, there still will be people. And what you're seeing is running out of buyers maybe, and then you're getting some selling pressure coming in purely because of the overall market going down. So that's why I would always be happy just to tighten up the risk a bit when the overall market's looking a bit tentative. Or on the flip side, looking at some shorts. What's the only one we've got going at the moment? Nick. Oh, there we go. So we shorted that at 670 on this little, I think it was this green candle actually. We got set on 670, backed off. The next day it popped up to 690, finished down, which was good. And then today, that's that the weekly chart. That's the daily. I think it was that day. What's the low? 673. So it was actually this green candle we got set just after the overhead south was looking good for a while. Then it finished. What did we finish? Close 684. And then that was Friday, and then today. So that's looking really negative for us. I think, well, looking negative in price, but good for us. So we're happy to have a short on the play as well. And this one, look at that, it's had this good move up. This is a decent sell-off. It's spent a lot of time trying to find some buyers again, started to pop up, but this pressure is nothing like what's happened in the past. This price action is a lot different to get these big, shock sell-offs. Another one, sell-offs in here before it even gets near the high. It's showing that sellers are starting to step in. They're not going to wait to get the highs. They're going to lock in some gains, whether they're from here, or even from here. If you're bought it just above 680, you saw it rush up to 750, you're behind the 8 ball here as well, and then it started to pop up, you might be exiting. So there's that selling pressure you can see starting to come in. And today it's starting to play out like quite nicely, 660. I want to see this take out 640 and then potentially, 575. Just see if you can get down below 6 and just see what happens from there. Yeah, it's always say sometimes it's prudent if the market's looking shaky, looking for some shorts as well. You've got to be hard and fast on the shorts. They don't tend to grind as much. So if they're going to drop, they're going to drop hard and fast, especially when the overall market's dropping. So it's good just to have that on the play as well. Let's look at CSR before. Look at that. Have you got that there, Sharon? Meg, yeah. What do you mean with that? Do you any means of research just looking at charts and graphics? Yeah, we do. I'm always looking at charts, obviously, because I'm looking for entries. It refines everything. It is like it's a bit of a skill, I guess, looking at charts, looking at technicals and trying to learn your technicals. But the same on the flip side, looking at reading fundamentals and understanding fundamentals is also a bit of a skill too. Both of them takes a bit of time and effort. But we would look at both. What do you look at in particular? Do you look at a lot of just fundamentals, or you look at a bit of both, or just technicals, or you're relatively new to the game? Yeah, we obviously, if you CSR, let's just look at CSR. We can just go through the news. What I'll always do is look at when I'm looking to buy something, just flick through what the latest. You can see these are all the news releases of CSR, and you can just look at it, say it was up that day. Read what's going on when there's some positive days. Read if there's a big down day. Read what's going on. It's 5.4% down. CSR limited results presentation. So maybe their results weren't quite as good as what they thought. The dividend was also on that day. It looks like as well. So what I'd always go through is just check out what's the flow of news, just to see what the bias is, what's happening. If the market's popping up, why? Is there some good news that's come out that no one knew about, or it's reiterating some good news in the past? I'm just trying to understand anything. Yeah. Okay. No, that's fair enough, isn't it? It's this is the way we would do it. I would ideally, and it's probably for me a lot of it comes down to CSR, obviously a bigger one. The smaller ones, especially your mining stocks. When I was working as a broker, I was full service. I got right into the obviously mining. A lot of people in Australia do. A good, it's a good sector. Learning a lot about just fundamentals and what to look for and what's the processes that report, especially the smaller ones when they come on, they start drilling, they shoot out some drilling results. So when I'm looking at a stock, you look at a chart, and you go, oh, it looks great. I'm looking for the setup. It looks ready to set up. Flick over to the news to see what's happening. Maybe they had some good news that ticked it off previously, and then that, for me, that bit of a pullback is more profit taking, and then it's more of waiting for that next bout of good news, or maybe the next bout of drilling results is due, and just getting for a feel for what the underlying fundamentals are. Because if the market's heading higher, then you know that the bias of the fundamentals is going to be positive, and people are trying to buy obviously low and sell high on the back of some good drilling results or something. Other stocks I find it a bit tougher because it's more the bigger ones I find a bit tougher because it's more of, for me, I'd feel I'd need a better accounting basis to understand half the, profit and loss reports, your statements, all that sort of stuff. But I would like to, I generally limit mine just to news flow, what's coming out and what's a good catalyst for a move higher and so on. Is it been quite positive news? Is there re-ratings or whatever's going on? Yeah, that's me. Better be good news. All right, I'll give you a good wrap of that then, Sharon. CSR, I think it's more the weekly that's well, that weekly is trending higher. It's, in all honesty, if it's looking like it's getting a bit extended up here, but the overall trend is up. So what I'd really be concerned about is more of these deeper corrections. All right, so how far is it going to go before the daily trend up, the daily trend starting, say, here at $4? We've got higher. Well, if you just forget about this past action, we're just looking for this move up. I'll draw it, might be easier. Alrighty. So we've got this as just pulled back. So we look at from here. We've got the daily chart. The daily trend started up. Bit of a pullback. We've got to move up, pull back, move up, pull back, move up. So we're currently on the way up. We're getting to a higher high just on this move up. But if we're trying to look for when's it going to potentially retrace on a weekly, this was pretty much a retracement on the weekly. It wasn't that significant though, because you've had, starting here, we've got this move up, correction, move up, correction. We've got this little move up, and then we took out the anchor of that level. We pretty much turned around and headed straight back up again. So what are we doing overall? So really the daily trend's up. The daily trend could be getting a bit stretched, and I'd say that purely because it keeps bouncing around in that overbought territory. It could keep doing that, of course. It could keep grinding higher. But again, it's that balance of probabilities for me. The probability of daily keeping going higher, of continuing higher, is getting a bit lower the further it gets away from basically that $4 mark without a decent correction. And a decent correction is more off that weekly charts. The weekly chart, well, that is the weekly, sorry, but this is the daily move up. The weekly chart, we had a minor correction there before we had a good leg up. So this leg, if we can just draw that, I'm just trying to draw it in a different color. This is where your weekly leg up. If we try to extrapolate that, it's somewhere around 240 up to about 520. What's that, $1.70? All right, no, nowhere near it. 43.45, $2.70, isn't it? $2.80. So if we go $2.80 from that low, roughly, what's that? That's $4. So it takes you about 680, maybe 660, 680. So this leg, just this leg, if you're just looking at it that way, that weekly leg up, we still could potentially just keep squeezing up towards 680, 660 to 680 zone. It could blow straight through that. It could fall short. We don't know, but that's just, so potentially this leg up, just the way I'm looking at it, could have a bit more to go, quite a bit more to go. And if you go back to the monthly, I mean, we've still got a lot of, it still could do this. See, you can see how it was starting to go vertical and it had these minor corrections and then go more. You can see it just started getting ahead of itself before we had this decent correction, decent washout. And that was obviously back in pre-GFC. GFC, it was already coming down after during the GFC, just to start 2007. So yeah, maybe we get a bit of that. It starts getting a bit of, you get these little spikes higher and then a bit of a pullback. So really from the daily, the way I'm viewing this is more that if it's going to get a bit ahead of itself in the daily, we might lead a little correction, maybe something like this, and you might come under a bit of pressure. So it all comes down to just where you're going to have your stops on that. Does that make sense there, Sharon? Or did I explain half decent? Anything else you want to take a look at, guys? Chuck it in. Anything you got your eye on, John? Magyar, anything you got your eye on there? You might want to just chuck into the chat. Up 35. We're still hanging in there. Oh, what was that one? I just want to take show you, this is MVP while we're waiting. I like this one. Probably if you've been sitting in the streams for a while, you know, I actually hold this one from 525, I think, somewhere around here. I mean, we bought it into it. I don't know if it was on this little pop-up here, but it's going quite well. The reason why I'm happy to sit through all this sort of stuff is because um, they're doing really well. Paul, no worries. BSL and Linus are pairing up. Nice. Another one. Beautiful. MDC. Oh, we've got a couple of good ones. MDC. That rings a bell. I don't know why. All right. So MVP, like that, you can see it's capped up at that $8 mark, but that's just that little correction lower has just washed out this previous $7 mark, but it's just popped back up. So on a very small scale, this may be one. We'll just have to see if it's going to start. That's it. No, that's not what I wanted. That's it. So have to see if. Oh, it was a bit shabby, wasn't it? $8 mark. That's it's just pushed down through 7. But if we just look at this move down, this corrective move down, the recent sort of anchor to that leg down of this corrective action was about just above 705, say, and it's just popped up through the last few days. So what I'd be looking for if I wanted to buy into it here, I'd obviously want to see it. It's going to hold up. For me, I'm anticipating it's going to hold up above 680. This little last leg up, if I draw that correctly. So this little leg up here, I would like to see, obviously, a bit of a pullback, maybe hold a higher low. Wouldn't mind seeing an inside higher low just to minimize risk. Otherwise, you're going to have your buy on a pop through the high. And then you know exactly where your risk is going to be. Your major risk could be down there. If you get this inside low, or you can just, if it doesn't give you the inside low, it just has a bit of a pullback and then goes, then it's going to be up here. Your entry is going to be up here and your risk is going to be a bit wider, but I think in hindsight, you're going to be looking up towards $8 and above. And they're doing really good things too, MVP. They just keep plugging away, releasing their products to more and more markets. The big one is going to be the US. Obviously, I think they've got patents or something over there. It's getting through the FDA approval process. But don't be surprised if that sort of drags on. But either way, it's been approved in the UK, Europe, a lot of different countries. Like Penthrox is their product, a major product. It's what do you call it? Used in medical. Someone has an accident, they suck on that just to ease the pain. Forgetting the wording, but that's what they're making. It's getting adopted by more and more countries, so they're doing quite well. You can see that by the charts grinding higher. The key major support would be way down here, and that little corrective action lower. I'm looking for a higher low in here, so I could be happy if we get this type of price action to add to my position and see if we can get this run up and just treat this as a new trade, run up through $8. Yeah, I thought I'd point that out. It's not traded a lot. It's got enough liquidity there if you want to buy some. I think this one's a longer term for me. I really like it. What else do we have? SDF. Let's get cracking. We'd have to go back a chart. Now you can see it's somewhere in the midst of correction, and probably just by drawing it, looking at the weekly chart. So you've got, for instance, the market was choppy through here, a good part of a few years before we started getting this leg up, pull back, leg up, pull back, tried to go again, but you can just see this action in here was choppy. You can see it's a bit different to this, where you got this pop up, fails from the high, but it's really just a few days, a minor pullback before it takes off again. Whereas this, you had this solid move down, back down to this support there, even washing out that low. Then we got this sort of grindy action, then another big day, straight down again. Then we tried to grind up. We just got through the highs before we had this deeper correction. So it's getting a bit heavy, I'd like to say, a bit heavy up towards that $3 level. So generally, when you're getting that type of price action, we'll go back to the daily. It needs a deeper correction. Actually, stick on the weekly. And now we'll go back to the weekly. I'll just get back up this chart. So when I say deeper correction, you've got a sort of support zone. It was trying to hold up here. That's your recent low. We've got through to the highs, washed out the highs before we come straight back down and cleaned out those lows again. So maybe from here, we could get some more pressure to have a deeper correction. So what the deeper correction does, it cleans out a lot of these buyers that bought it a bit lower. So if you haven't, if these buyers up here at around 280, 270 haven't been cleaned out in this chop, even with this, they might be, if they're still holding, and they've been holding it all through here, going from profit to loss to profit to loss to profit to loss. Probably the most recently they've been stuck in losses, and you got this little pop up. They're starting to look okay again. If you bought at 270, you're 10 cents up. If you bought at 280, you're about break even. But if they're looking a bit heavy, and the daily is, you can see it's a bit overcooked up here, a bit overbought, and we're nowhere near those highs of $3. We're around 280. You might get some more selling pressure coming in. So we might find that these people who bought around here just go, no, I've had enough. Especially if we start getting a stronger move down, like these couple of days, these bigger days, and it starts heading south. You'd be looking to that sort of support zone through here, even at 250, for at least to test that 250. And if we don't, it could get a deeper correction. But the anchor to that move up, so that's your first leg up. This is your anchor. That's your second leg up. It's choppy. We could get this deeper correction, and then it has to reset itself. So we might get this big pullback, like down to 220. And then what you'd want to see is buyers start to step in and a bit of contraction in price, potentially holding some higher lows before giving you a setup and going long again. And that's why you're going from a market that's moving down. You're not buying into a market that's moving down, but you're buying into the market that's starting to move up again and showing you more signs of positivity, I guess, of buyers starting to take back control. And then you'd be looking to gun for those highs at $3 and above. Hope that makes sense. But at the moment, it's that daily chart that I'm not too positive on. I don't like that sort of rejection. It tried to push up here, got to overbought, nowhere near the highs before it's come all the way back down to these lows again, that support zone. Popped back up, took out this, but it's got overcooked again. So you don't want to be caught in this choppy action where it's a fight between the bulls and the bears, and then you buy it, and then you find out the bears actually win, and you get stopped out, or you have to sit there and put it in the back pocket. A longer term trade, it gets onto the longer term list and see how we go. Yeah, I would just be keeping an eye on this one just at the moment. What else we got? BSL. Let's just see how Paul is ticking. Oh, beautiful. Ticking away nicely, mate. Look at that trend. Boom, 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 boom. You had this for quite a while. I think you bought it. I don't know where you got it. Somewhere around here. It was actually, it might have been earlier than that, Paul, wasn't it? That's going no, and there's nothing to say that's gonna have a pullback. Just you have to go all the way back to the monthly to see if we could run into a bit of pressure, and it's right on that 1750. Look, that's from way back in 2009, so it may prove to be nothing. Or um, if the company significantly changed between then and now, then you can take less emphasis on that level and just keep grinding. Just continue this grind higher. It's pushing up, maybe due for a bit of a correction soon, a bit of a pullback, but it's holding higher lows, higher highs. Away we go. Trend is up on both the daily and the weekly. Long term, beautiful. What was the other one? Linus. Linus is a bugger. I was looking at this somewhere around $2, so missed the boat on that one. But that one's again, it's heading higher, and you can see what I like. Probably the best thing is the market's headed down. You found the base somewhere around 50 cents, 70 cents, whatever this price is worth through here, 35 cents. And then we got this little spike higher, pulled back, started finding a base at a lot lower level. Sorry, a lot higher level, somewhere around 40 cents, 45, 48 cents. All right. So it's starting to hold a higher level, but you can see the amount of time, a year in here, another year, but this probably another 6 months before it started to lift again, and it's starting to trend higher. So it's starting to come out of this. So that's a lot of buying started building through here. So 2015 and 16, which would lead me to believe that that leg up is going to be longer and stronger. And it could just, if it just continues on this sort of gradient, I'd say on the way up, then great. That could you just keep holding it. You're going to get a bit of a pullback, builds a higher low, goes again, has a bit of a pullback, builds a higher low, but your longer term is just trending up nicely. SLR, over to that. boom, up she goes. That's look, I'd say that's due for a pullback. Just eyeballing that. This one for me would have been a tough one to trade. Just trying to get a bearing on it. So you've got your market's moved up quite nicely here. It's a bit more controlled. Boom, up, and then found the base in here. Still, now that trend is up. Had to get a bit choppy. Held a high low. Up we go. Only got so far as was about 80 cents. Then we got this lower high. Started heading south, but this pretty much turned on a dime. Pulled back here and then just started boom up. So that was really going to be a tougher one to trade. I mean, that for me is not an entry, especially after this grind lower. Um, it could be just news based, which ticked it off high, but it hasn't looked back just yet. Ideally, if it's pushed up, I'd ideally like to see a bit of a clean out like that. Doesn't get down to this low at about, was it 35 cents? And then start to lift, give me a little entry from there where I could minimize the risk. I'm always looking for the entries to minimize the risk, get on the right side of the market. Yeah, at the moment, that could be just looking like it's going to grind up to 80. We'll have to see. It's getting overextended up here. So the probability of it continuing higher without a pullback. So if you're going to buy it here, you might have to buy it at 58, sit through a pullback. It goes down to 45, 50, who knows where it's going to go to. You'd have to be prepared to sit back. Otherwise, your risk is going to be below 50, say 54 of this leg up, because you don't want to take too much risk if you've got a low probability of the trade working out. But for now, it's grinding high. If you're in it, great, especially if you're in it from down at 40 cents, awesome. If you haven't taken a partial, maybe look at taking a partial. Who knows? But again, to take a partial on this one, if I bought it in here, because there's no real significant level until another, say it's only another 10 cents higher, I might want to take it at 70 or have a trailing partial, have a trailing stop it for half or whatever your partial wants to be at 54, 55. You get stopped on that, it's probably going to be a bit of a corrective action. You can always jump back in if you like. If it starts building again, holding high lows, if it has a pullback to 50, starts building, you can jump back in to a full position and away you go. But if it doesn't have a deeper correction, you might get that re-entry down at 45, 40. Right? Yeah, that one's heading higher. It would have been a tough one, like I said, just for me to trade that. So I don't see any significant clear entry with the bias when the bias was up. This bias was down here. Even at this stage, it could have just popped up because there's no clear anchor for this move down either. It was just straight down. Whereas this move down, pop back up. You've got an anchor here, push back down, pop back up, new anchor down, new anchor down. Instead of here, it's just more of a grind down, especially this action. All right, what about MDC? Let's see what that is. It's nothing. MedLab. This is interesting. It's a new bone. It's very small trading on that one. 65. I've got a feeling we've talked about this before. We may have, John. We'll just look. It was probably go to the weekly. The weekly here was showing a really good picture, but then you got this spike up to $1.20, and then I don't like this. I don't like the fact that it's just gone from $1 up to $1.20, boom. Especially this big red candle. Maybe that was bad news. It triggered that. Maybe everyone was waiting for some good news. It's buy the rumor, sell the fact. The fact wasn't very good. So when it's buy the rumor, sell the fact, you're probably going to get a minor sell-off. Even if the news comes out as you expect it to be good, comes out good, people sort of get stuck holding it there. They not going to sell it because it's good news, but they're really not willing to buy it because it's been pushed up. It's been supported. But then when you got bad news comes out and everyone's expecting something good, that's probably where you get that big expansion candle down. It just capitulates. And then you got obviously selling all the way down. Now what's happened, it's found support at 50. It's reacted off 50. But off the weekly, there's nothing to say that this can't be a lower high. And then it takes out some more lows, takes out 50 and heads south. You don't know where to from there. It could go down to 30, 35. Then you just have to assess it. So if you're looking to buy into it, obviously on the weekly, you want this bit of a pullback. Start to see buyers flow in at 60. You can go into your daily charts. Oh, look, it's got a bit of a green candle here, so it's a bit of a heads up. Maybe I'll draw that. Yeah, I think we did there, John. So I'm guessing the way to make money is going to be more based around news releases. So this is your key level. Obviously, it's traded right back down into 50 zone. It's reacted off, which is good reaction off. But then when you see this strong reaction up, what I'd like to see is this kind of move down, but don't get down to before it starts pulling up short and building a high low. And that's what I like. That's not convincing selling as compared to this day after day bang straight down, or this. That selling is very convincing. Pretty clear who's winning there. And then you try to get a bit of a bounce here, and then it started capitulating again and accelerating down before it fell short, hit 50 and reacted. So it's reacted quite well. In a few days, it went from 50 up to 70. So it's a 20 cent gainer, about 25, 30%. Yeah, 25, 30% there. No, it's not. It's about 50%, isn't it? Rally off those lows before a couple of red candles. Then we've got a green candle. So that green candle is showing you, it's like an early warning signal that, hey, hang on a second. I think this story is maybe not as bad. There's some good news potentially coming. Who knows what? Who knows? Some people know stuff that we don't. You can always say that. So ideally, what I would be looking for is this. This action is supportive. Okay, it's getting sold down, but it's not the strength of selling that we've seen before, previously. So I'd like to see that. And if we start to hold, that's what I'd like to see. That sort of grind down, then followed by a high low. If we get that high low, then I'd probably be keen on this one purely because it's had a good run up. So something's happening. And then if it's around that 65 to 70 mark, say we get that, you got a small, maybe 10-cent risk on that, then you could be looking right up to $1.10. And that, risk reward could be really, really good. Okay, I'll have a look at that in a second, Magna. All right, so that's that one. What was the next one you had? AXL. That's looking good. Geez, that's actually looking good. What is it? The problem is it doesn't trade a lot. Just look at the volume. It's bugger all because it's 16, 17, 19, 20, 23, 28. Not many offers there at all. I mean, obviously it's quite positive. There's a lot of bids in there. People are willing to step in to try to buy it. Maybe if it pulls back, but there's not a lot of trading on that. So it's really specky, obviously. But the chart itself, it looks good. This couple of red candles after this little move down. I'll go take a step back. All right, so what you've got, market's moved up, very positive. It gapped up here, and it's come all the way back down, which is okay. Then it's not looking so good the way it reacted off to, reacted here, but you can see this. This is quite different. That reacted as more of a grind lower, and we got this green candle. It's opened down, sort of rejected below 210, and then finished positive on the day. Then it looks like it's starting to curl up again. So you've got, if I can draw it, you've got price action. It's gone up quite hard, come down quite hard, reacted, but then it's starting to curl. It looks like it's starting to curl. And if you get that, you can get an entry, you can find out maybe an entry through 220. Then I'd suggest this one, it could just keep going up like this and start attacking back up through 240 and beyond. I just have to keep an eye on it, but I just like the way, I like this kind of action. The way its buys are starting to step in, at 210, between 210 and 220 and supporting it. It was over a good couple of days, whereas probably double the amount of days that it took to sell off quite hard. So it looks like there's buyers stepping in at higher prices, really, willing to give it a bit of a nudge. But that chart looks a lot better than the previous ones. It looks good. All right, what was next? RUL. That's not as convincing. RUL. If I go back to the weekly is actually better. I mean, the weekly is actually not too bad. Let me just see if I can get, I don't know. Let me see if I can get more data. Okay, that's not it. Let's not worry too much. But you've got these are sort of the highs, which previous key high or before we started getting some selling pressure coming back in, sold all the way back down. Then the market's lifted. We've got up here, we've got this spike through. That in itself, if you're just looking at that stage, the way it rejected there, not so good. Then we've got this pullback, it straight back up through again, a deeper correction, straight back up to high. So that was had to correct deeper, take out this recent high low, bang, down, went straight back to the highs. Couldn't get through again, couldn't get through that 80 zone. So we've had this deeper correction. So you can see it's pulling back, but it's starting to react. If we get from here, this becomes your line in the sand for a higher low, so just below 60. And I'd like to see the volatility come out. So the market's come all the way back down and we're starting to get this sort of price action. And it's ever so slowly holding some higher lows, you can see. Then I'd be looking for a little pop up, potentially pop up, pull back, build your high low, and then it's going to be some good evidence that buyers are stepping in at higher levels and then starting, and that could be the move, especially if it takes a bit of time, not just after. You can see the time it started to have a go. It didn't take a few days down, straight back up in a couple of days, couldn't get through a few days down. But I'd like to see it spend a few more days just consolidating through here. It's better evidence that buyers are supporting that price. That's your line in the sand. And then see if we can get this pop up off higher lows. Yeah, that one's the week. That's your weekly, obviously. So it's going to take a bit of time. You can see that trend is up. It's respecting that trend. I mean, if you bought it here because you think this is going to happen, there's nothing confirmed. And this could just as easily turn to something a bit sour and head deeper, a lot deeper correction, break this uptrend, have that deeper pullback, and then you're having to sit there. If you bought it up here, you're sitting there, 20, 30% against you on the trade, waiting for it to find some support. Where is it going to find support? You don't know. You don't know if it's going to be at 50 or way back down at 30. That's why you're better off waiting to see the evidence that it's going up, buying into it as it's rising. Then if it turns on you, you get stopped out. You're not risking a lot, one, and something is wrong, and you'd rather be out reassessing it. All right, I hope that makes sense. All right, let's look at RAND. Just having a bit of a sip of a cold coffee. RAND, what's that? Range International. Oh, look, this is very, very early days on RAND. Look, there's no news out. What's the news flow? The last 74%, 27th of April. So that was a while ago, a couple of weeks ago. So that was the last sort of news release out on that one. So yeah, it looks like when it's popped up, you got to remember, there are people that are going to know things that you're not going to know. I mean, we all know that. We've seen it before. We've seen things get, do nothing and then ramp up a bit. You go, oh, what's going on here? And it perks your interest. And of course, they have a bit of a news release. It might be a capital raising. All of a sudden, the capital raising's at a discount, but 3 days before that, it wasn't a discount. It was where the price was. You might find that they do get a bit of a kick up, and then some good news flow comes out. So it just shows you that if it's going sideways for doing nothing for a long time, and it starts popping up, somebody knows something you don't. I mean, you can't. There's no way around that. You just have to sort of suck it up, and unless you go and speak to the CEO, what's going on, and they tell you, great. If they don't, too bad. But basically, look, it happens. It's really hard to combat when you get, I guess, companies. I don't like to say too much. I don't know if I'm giving the shit for saying it, but basically they'll go around and they'll do a bit of a spruiking to companies, especially brokers. And the brokers won't be shy and ask them, is there anything news coming out in news flow that we can keep an eye on that's going to give this a bit of a kick, do you think? And it just gives them a reason to get into it. I mean, if they're willing to chuck their clients into it, it's sort of, I'll scratch your back, you scratch mine. And that's where they may, or I mean, not going to say they will know specific things, but they might just simply get told they're in a meeting, they're sitting there, you've got thousands of clients, they know that. They know that you could support this price and give this price a bit of a kick just by buying into it for your clients. And they'll say, look, there's some good news that's coming out probably next week. We know it's going to be good for the company, blah, blah, blah. They won't say exactly what, so there's nothing really too bad. Brokers will be happy to go and buy it. Go, okay, I know he's legit. It's a good story as well. The underlying company might be what they're going to do, what they've got planned is good. It's just that extra thing that we're never going to find out as a retail trader sitting here watching charts or even reading news. You're never going to find that out. And this is where even fundamentalists are going to fall short. You're never going to know if there's a news release, especially in a mining company. Drilling results come out and they're good. You're not going to know that unless you've got some sort of inside track on it. It's going to give price a good kick. But hey, so that's all to me it looks like. And the fact that it's below 10 cents, I mean, that actually, if you go back down, that's your daily chart. It's really hard to see because there's not much data in there. This little spike here, and you've got a couple of days of pullback, and it's gone sideways around 6. It could also be a 10-cent play. I don't know if you know much about that. When things, you can see we're going 8.5 to 8.6 offered, last of 8.7. So they go over increments of 0.1, 0.1, from 8.6 to 8.7 to 8.8, 8.9, right up to 10. So as it clicks over 10, it goes to 10.5, 11, 11.5, 12, 12.5, and so on. It goes in half a cent increments. So a lot of the time they play it from below 10s. They play it, so below 10 cents, they play it into that 10-cent zone. So this is looking quite good to your retails. It looks great. Got a little spike up here. They're going, oh, it had a higher low. It's spiked up into 10. And they might be looking at it around that 9.5, 10-cent mark. And they go buy in at 10.5 or 10 cents. And they break, they're even at 10 cents. And then all of a sudden it stops at around 10, 10.5. And it can just be played. And you can see good volume going through, but it's not actually going anywhere. And they just play it. You might get the bigger punters. It happens time and time again where 10 cents sometimes can be, you just get, sometimes it can go straight up and through, and sometimes it actually backs off from that zone. So it could be the fact that it may get played up into 10 cents, and then you might feel a bit of selling comes in after that. Or, there's something happening we don't know, and it just blasts off up and through. So, I mean, if you're going to buy it here, you'd want to put your stop below 5.5 cents. And then just, I guess, you're banking on the fact that someone knows something you don't, or it's getting played for 10 cents. Either way, if it does keep going up from here, good. But if it just backs off from here, your risk is going to be below, say, 5.5 cents. But other than that, technically, it's got a bit of an entry. You break through that high at, what was that high at 8 for 8.2. You're buying it through 8.2. Your risk is going to be there. Technically, okay, that's a buy entry. And then just hoping that you're getting that push. Let's just go back. Push up maybe to fill that gap at 20. Okay, so be it. That'd be a great trade. Yeah, unfortunately, we don't know what's happening there. There's no news to say what's going on. I think someone knows something, obviously, but we don't, unfortunately. And that's going to happen. All right, probably have to finish up there, guys. I hope there's some useful stuff in there for you. If not, tough. If anyone's got any questions too, just send through an email to support@tradesetup.com.au, and I'll get onto it. And also, what we're thinking about doing potentially is doing some sort of education. We do have something going now, but if you're interested in that, or you're interested in down the track, just let us know, and we're going to be putting together something. But yeah, just send us through an email. So yeah, I'll be interested in that. If you find what we're saying useful, tips and tricks, and you want to learn how we do things, yeah, just send us through an email to support@tradesetup.com.au. All right, guys, thanks very much for joining me. We'll be speaking again on Thursday, isn't it? Thursday at 12:30. Cheers, guys. Enjoy your day. Bye.